Now, year to date, the S&P 500 is down 18%. And ladies and gents, this past week we saw it recovering quite well. As seen on the screen, you'll notice that on Friday, the S&P 500 went up, ladies and gents, by over 3%, which meant that this week the S&P 500 rose by over 6%, which is one of the things that is always good to watch. Now, ladies and gents, you'll remember that the reason why the stock market has been crashing this sharply is simply because of the high inflation that is currently in the US and a possibility of a recession coming. These are some of the two things that is making, of course, the stock market to crash so heavily. I mean, most of the products that people are using in the US on a day-to-day, they are quite high. I mean, I've seen on the streets of Twitter a lot of consumers in US indicating that the gas prices are just so high, which is a concern to those, of course, that are traveling, going to work, or using their gas cars on a day-to-day. So this is one of the things that, ladies and gents, we have seen, of course, inflation rising in the US. I mean, 3 weeks ago, we got to see the CPI coming out, or the cost of living in the US increasing to around 8.6%, which is something that, of course, this resulted in the Federal Reserve 2 weeks ago coming out and increase the interest rates by 0.75% or 75 basis points, which was the highest interest rate hike ever since the past 28 years. Now, this, ladies and gents, is one of the things that, of course, it is making the stock market to crash. Now, all these factors which I just told you, which is high inflation and, of course, a possibility of a recession coming, are the two incidents that, of course, are making the markets to trade this low. Now, like I said, to get to see that this week we got to see the S&P 500 recovering by over 6%. It is one of the things that, of course, retail investors liked, as most of the stocks that, of course, they owned or they have in their portfolio saw some good recoveries. Now, with all that, guys, JP Morgan believes that, ladies and gents, in the second half of this year, that is from July to December, we can expect the stock market or the S&P 500 to recover, as the US is going to probably try to avoid recession, or the US is going to try to make sure that we don't get to see the US economy going into recession. And of course, they are also foreseeing the inflation cut or being cut into half, meaning that 8.6% yearly inflation that is currently sitting at the US, we might see it probably at around 4.3 or this. And this, ladies and gents, it is the prediction that, of course, JP Morgan is predicting. So they are seeing a good recovery in the markets in the second half of this month. But of course, ladies and gents, before we dig deep into this topic, or into those topic of JP Morgan seeing a recovery in the markets in the second half of this year, ladies and gents, you already know that this video is just an entertainment video. You should not take it as a professional financial advice video. Now, I'll really appreciate if you can just hit that likes button if you do consider, of course, or if you do receive the good content or get out a good content from this video that I'm just making about the latest developments we got to read about JP Morgan's latest sentiment. So without a waste of time, JP Morgan's, like I told you, they are saying that they are believing that, of course, the markets will do or will recover quite well in the second half of this year, which is one of the things that, of course, they are putting it based on the fact that they are believing that the inflation in the US will be cut into half. And as I've said, it means that, of course, we might finish, of course, the end of the year with an inflation of around 4.3%, of which, yeah, I personally believe that that will be really great to watch, to get to see the US inflation coming down that low. And of course, they're saying that the chances are very high that we don't get to see a recession on the US economy, or we don't get to see a downturn in the US economy, which is one of the things that, of course, it will excite a lot of investors if the US can avoid, or the Federal Reserve can avoid the economy, or the US economy, to go on a downturn and enter a recession. Now, you remember that some of the institutions like Morgan Stanley and Goldman Sachs believed that, of course, the S&P 500 this year will fall to around $3,400, which, of course, it has not went to that low, which, ladies and gents, we don't know if whether it will still continue dropping, as on Friday when the market closed, the S&P 500 closed trading over $3,900. So personally, I don't really know, of course, or no one really knows, of course, what will happen in the market in the short term. That is, of course, what will happen in the markets next month or after 2 months. I don't know if the market will still make a downturn and go to the $3,400, which were predicted, or which was predicted by Goldman Sachs and Morgan Stanley. But all I can say that if the market continues dropping, or if we continue to see a massive drop in the markets, obviously I'm going to continue loading the boat. I'm going to go and buy the VOO or the Vanguard S&P 500, which is my favorite ETF, which I like now, especially that, of course, the index or the S&P 500 index has been going down sharply due, of course, to the possibility of us seeing a recession and inflation being high in the US. Now, to get to see that JP Morgan is coming out and putting out this bullish sentiment, it is one of the things that, of course, will definitely boost or make or bring confidence to some of the retail investors to probably go in and load the boat on some of the stocks or some of the ETFs, which they would like to obviously get to gain returns as the market recovers. And like I said, me personally, the VOO or the Vanguard S&P 500, it is one of the ETFs that I continue to prioritize. I continue loading the boat on, because I personally believe that when the stock market recovers, when we get to the all-time highs, I will definitely be happy with the kind of returns that I would have generated, especially taking an opportunity on the low trading prices that we are seeing on the index. Otherwise, with all that, just thought I should just give you the quick updates about what is it that JP Morgan just said about the second half this year, or about the stock market in the second half of this year. And of course, if you enjoyed this video, please consider hitting that likes button, comment, and subscribe. And once you subscribe, don't forget to hit that notification bell so that at least you get notified by YouTube every time I drop a new content. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey. And of course, before you load the boat, do your own due diligence before you, of course, increase your holdings or buy ETFs and stocks, so that at least you can be comfortable whenever you put more money in the stocks, ETFs you like. Otherwise, that's all from me, and God bless you all.